Hello, everybody. This is Ramin Hashemi, and I want to go ahead and kick things off today. Um, I will be moderating today's webinar, and we have Jim Keenan, who is going to be the presenter. A couple of housekeeping reminders. First of all, we are recording this webinar, so you'll be able to listen to it later if you missed anything. Participants will be in a listen only mode. So if you have questions, please go into the Q&A box, preferably Q&A and not the chat box. That way we can keep track of your questions and make sure that Jim addresses them. We will send you a copy of the presentation afterwards, along with a survey. So we would like to ask you to, if you have any questions, to ask them now, but you don't need to take notes. We'll send you those the content later on. So let me go ahead and share my screen. Okay, so as I said, today we're covering the SBA 7A loan program. But before we get into today's content, I want to talk a little bit about SCORE. Just a few reminders for those of you not familiar with SCORE. We are a nationwide nonprofit associated with the Small Business Administration, and we are proud to help America's small businesses with really two key critical services. One is one-on-one confidential mentoring, and the other one is education, whether it's events like today's or providing you online resources on our website. Those are the main things we do. We have over 300 chapters nationwide, all volunteers, with over 10,000 of those volunteers. Here in SCORE, Minnesota, we have 90 volunteers that serve these two counties. And over the last few years, we've opened up our educational series outside the area as well. So I know some of you are outside the area and learning the content here. We're proud of everything we're doing in serving our community. SCORE has helped over 11 million clients and small businesses since its foundation. In terms of where we fit in, if you start from left to right, a lot of the work we do is really people that have ideas for small business and really are still in the research and planning phase. Then sort of people that get into the area of, all right, I want to open a business. What's involved in that? How do I get it registered? What are the considerations for starting a business? What are the things I should think about if I've never developed a business plan? What are the items I need to be concerned about? Then the next phase is folks that are already in business, but they want to grow faster. They want to grow their organization. We're getting a lot of folks that want to add staff and they've never had staff working for them. And they want to learn more about what does it take to grow the staff properly and train them. And then lastly, really an exit strategy team where someone wants to sell their business or close it or transition it to family. So all of those are areas that we get involved in. All of the content for education, all of the recordings are on our website, score.org/Minnesota. And if you want to request a mentor, you just go on the website and find request a mentor. It's a very quick form. We get it, and we go ahead and assign a mentor that has the right expertise for you. We wouldn't be able to do the work we do without our sponsors and community partners. Jim is here representing Bank United, but we have several other great partners in the community that allow us to do what we do today. So we're very proud of that, and we continue to grow that list. So I'm going to stop sharing the slides and turn things over to Jim and ask him to go ahead and share his slides. Jim?
Thank you, Raymond, for that introduction. Good afternoon, everyone. It's a pleasure to be with you today. First, want to thank Mike Tallarico. He's our branch manager in the Sarasota market. the Southside Village market to be exact, that made the introduction to the Minnesota SCORE chapter. So I'm honored to be part of it, and look forward to your questions. And I'll be sharing with you a little bit about Bank United, what we do here, and of course the 7A loan program from a preferred lender's perspective. So let me get my show up here. Okay, so a preferred lender's outlook. If for those that you may know, Bank United is a preferred lender with the SBA, and really what that means is they allow us to use our credit underwriting, closing process, and decision making in-house, which makes the process for any SBA loan a little more efficient. Using our own credit guidelines, we can really drill down to any kind of request, whether it's a 504, a 7A, or recently rolled out the SBA Express program. So who is Bank United? We're a Miami-based bank with over 62 branches from Orlando, Southwest to Tampa, Fort Myers, Naples, and everywhere in between, as well as Southeast from Vero Beach south to Miami. So a pretty good foothold in the state of Florida. But if most of you don't know the history of Bank United, we were acquired back in 2000, I think it was 2009, after the crisis, by the First Equity Group that was held by John Canis. They came in and bought Bank United at that time and made its first equity play in the banking space. I was with Bank United at that time and was with them for almost 7 years during the transition, and just recently rejoined Bank United the end of 2021. As you can see, a few of our financial highlights: 37 billion in total assets, a little over 27.5 in deposits, 2.4 billion in total equity capital, and currently on our books as of the end of last year, just over 24 billion in loans. So we're a fairly good sized bank. I'd like to just share a quick video. I know I'm throwing this in there, Raymond, but we had our retail small kickoff, business kickoff yesterday in Miami, and they shared this quick video. It's only a couple minutes. Let me get it pulled up here. And I think you'll really get a good idea of what kind of bank we are, how we operate, and the people that are behind us. Sorry, jumped ahead there. Sorry about that.
Jim, you might have to share that other application that's running the video.
Okay. Start. Try it again here. How about that? Does that work?
Yes. So we're not hearing the sound. Yeah, there's a.
All right, let's. I could share that once I send out my presentation. I think the takeaways from that video was that I started my banking career in Florida with Barnett back in the mid-90s, and I could tell you, Bank United has that same feel. They allow us the autonomy to work with our business clients and make decisions and do things, from a true banker's perspective. I think that's what really separates us. And in the video that you'll see, down the road, I am Bank United. Mike Tallarico, most of you know him. He's been in this business for a while. We were speaking yesterday about this presentation and how much, the bank has been involved with SCORE, not only in the Sarasota markets, but also throughout the state of Florida. So again, we're honored to be part of this, and I'll start to jump into my presentation. So let's go ahead and get that going again. Okay. So last year, as you know, coming out of the COVID crisis, all banks had to deal with the challenges of that. But I think there's a lot of positives that have come out. So I just wanted to share a few statistics that I learned last year as we head into 2023 from the BAF, the Bankers Association Finance and Trade. There were 33.5 million small businesses formed in the United States. 80% of those, or 33.5 million, out of the 33.5 million, were classified as sole proprietorships. And then there were 5 million new business starts in the 2022. And they also classified 300,000 businesses out of those 5 million as exporting companies. But the census felt that this was severely undercounted due to the numerous sole proprietors that sell products online, may export or ship products overseas. So that number of 300,000 on the export list is probably a lot larger. In addition, I attended the FLAGL conference in Orlando, Florida. FLAGL is the Florida Association of Government Guaranteed Lenders. And we had many representatives from the SBA there. And a few of the key takeaways was, again, not to dwell on the COVID pandemic, but it's really starting to drive a lot of migration, not only of business owners, but people coming from New York, California, et cetera. And as you can see, Florida leads the nation in net income migration out of 47 of our 50 states. And you can see for 2019 to 2020, they had over 23.7 billion in net income gain. And you can see the top 5 states where that net income came from. As far as SBA 7A loan production in Florida, you can see both the North and South regions combined for fiscal year 2021, just over 2.5 billion in revenues or loans funded, and just over 37,000 jobs created. And for the fiscal year 2022, as of this meeting in September, just over 1.7 billion in loan production and 31,000 jobs created. So still on track to meet that for 2022, but going into 2023, I think you're going to see a big migration of the effects of the COVID pandemic. And what I mean by that is, since I started back with Bank United in 2021, 90% of the business requests that I'm seeing are for business acquisitions. So that could be like-to-like business purchases. It may include real estate, but we're really seeing a strong push for either companies relocating here or companies or people looking to retire sooner than they expected. So what is a 7A loan in the SBA program? I call it a utility loan, but it's the best option for a business owner, whether they're looking to just start a business, acquire a business, or do some expansion, or they've got future projection of growth. So the 7A loan allows you to combine all the use of proceeds into one loan. So if they're looking to buy a new piece of real estate or a piece of equipment, but they need more inventory or working capital, that 7A loan can capture all of those needs into one loan. We can refinance current business debt, as long as we can prove the reason for the debt. There are certain cases where sometimes a refinance doesn't make sense, but if they've been putting expenses on their credit cards or they've paid cash out of their pocket, we can possibly look at refinances. Of course, if they're looking to expand, add some fixtures and equipment and inventory, that's part of it as well. The max loan amount for 7A is $5 million. But we will look at the business, we'll look at its credit history, we'll look at the historical cash flow, where the business operates, and look at all those needs for eligibility, which is part of the next slide. And as I mentioned, it's a utility loan where we can look to amortize the loan from 10 years up to 25 years based on the use of proceeds. Eligibility is always the first thing we look at with any SBA loan. Of course, the business must operate for profit. It can be a startup, so we will look at projection base for 3 years for startups. Must be considered a small business as defined by SBA. And just a couple key points there is they must have a net tangible net worth under $15 million as a business. So if there's one business owner has other affiliates or other businesses that he is a primary owner in, as long as he's under that $15 million net worth, we are good as a small business owner. Must do business in the United States, but the SBA is making a very big push, as our country is, to provide more exports around the world. So the SBA is really trying to engage with Bank United and other lenders to expose that program. They must be able to demonstrate a need for the loan. So that's one thing as an SBA lender that we have to clearly identify in our credit memo is the need for the loan. And then the next thing is the use of proceeds. As I mentioned, the 7A allows for multiple or various different uses of the loan proceeds, and we've got to be very clear and concise with the SBA on how those loan proceeds are used. And of course, they can't be delinquent on any existing debt obligations to the U.S. government. No back taxes or property taxes, et cetera, can be delinquent at the time of application. And again, as I mentioned earlier, as a preferred lender, most of us that are our preferred lenders with the SBA are operating out of the same playbook from the SBA SOP. And as most of you may know, it's a lot of words, it's a lot of verbiage. The SBA hasn't changed much in 100 years, but we're all playing by the same rules. The loan structure, as I mentioned, I call it a utility loan. We could purchase or refinance owner-occupied real estate. And in that case, on real estate, the business owner must occupy greater than 51% of the space in a piece of real estate. If it falls below that, it would not be eligible. If they're looking to do new construction, they've got to occupy at least 60% of the new construction space. And of course, we can look at equipment, business acquisitions, working capital, any expansion plans, whether it be improvements to real estate, new construction, as I mentioned, ground up construction, franchise acquisitions, and of course, medical practice startups are going to be a huge component for the whole state of Florida as we move forward. We can amortize loans with real estate up to 25 years, and that could be a loan to value from 90 to 100% in some cases, based on the use of proceeds. Of course, there are no balloon payments in an SBA loan. They have to be fully termed out and amortized. Bank United offers competitive market fixed rates for 10, 15, and 25-year terms. I think we're one of the few lenders in the country right now offering a fixed rate on those terms. And of course, the SBA allows for closing costs and the guarantee fee to be financed into the loan. I know it's a little hard to see this slide, but this is kind of our underwriting matrix for use of proceeds. So it can give you a good idea of how we look at an owner-occupied piece of real estate, a startup, an expansion, franchise acquisitions, or startups or purchases, equipment. Again, business acquisition being a big part of what we're doing today. And of course, as I mentioned earlier, we rolled out our SBA Express program the beginning of this year, which is a different tool other than the 7A, but kind of has the same term and fixed rate as our 7A. Just to expand on that, out through the worksheet, you can see the loan to values and equity requirements, the management experience that we're looking for. So if it is a startup, we're looking for at least a minimum of 3 years of transferable experience. That's what that T means in that box. And any startups or construction type projects, the bank will do a pre-screen. So there are some requirements that we'll ask for the borrower to provide for us to pre-screen what they're asking for in those scenarios. And then out to the right, you can see the debt service requirements that we have, as well as the minimum FICO scores. So here's a little snapshot of our 7A term and pricing. As I said, for equipment, inventory, working capital, we can go up to 10 years, and our current fixed rate is at 6.75. We do have a variable rate option. So going back, and we'll talk about that with the Express, that would be a prime plus 1.5 to up to 2 3/4. On owner-occupied real estate, we can go up to 25 years, and our current fixed rate right now is at 7.75%. So I know these rates can be sticker shock for a lot of your borrowers. We've been living in a low interest rate environment for so long. It is kind of sticker shock for a lot of people when they see these, but again, comparatively, I believe just hearing, the outlook for the remainder of this year, we don't anticipate any bigger increases in rates moving forward. As I mentioned, business acquisition and expansion and startups are really a lot of what we've seen over the last 18 months. And we can go up to 10 years on those use of proceeds. And again, at the 10-year rate of 6.75. Our Express loan can work as a line of credit for permanent working capital. So the first 3 years of the 10-year term would be a revolving period. And then the 7 years would be a term out of any balance that's left on that line of credit. So for that first 3 years, the borrower can use the proceeds, pay it down, use it again. And then at the end of 3 years, if there's any balance on there, we will term it out for 7 years. So here's our Bank United appetite. Our desirable projects are the owner-occupied real estate, refinances, expansion, exporting, equipment, and strong business acquisitions. And on the acquisition side, we'd like to see at least 5 years of direct experience, or we can look at transferable experience if they're coming from a different industry. Our favorable industries, hard to believe restaurants is at the top of the list, but we will look at restaurants. I did finance a few of those in 2022. One was an acquisition and one was an expansion or improvement to the restaurant. We really like franchises, and the reason we do like franchises is because there's a lot of history and data that we can look at based on when the franchise was formed. So we can rely on that data, especially if it's a startup or a new franchise. But again, I financed a few franchises that were acquisitions, some Jimmy John franchises that were looking to buy other Jimmy Johns. So a lot of that activity in the market right now. Express car washes, we'll look at those. Gas stations and convenience stores. We will look at liquor stores. Big box daycare. I'm looking at a deal right now where it's 2 daycares looking to acquire a third location with the real estate. And the idea is there that one of the daycares will combine with the one they're purchasing. So a lot of different ways to look at the acquisitions from not only daycares, but other business lines as well. We will look at some retail. Medical is always a popular spot for new doctors or practitioners getting their practices started. And of course, the professionals, our attorneys and CPAs. Again, most of what I've seen in the last 18 months are CPAs acquiring other firms or attorneys acquiring other firms. So that's it as far as my presentation. I guess we can open up to any questions that may have had, Remy.
That sounds good. We actually have a couple on the Q&A box, Jim. One from Stu Webb says, I'm ready to go. Where is the BU in near Tamarack, Florida? So I sort of goes hand in hand with the question I had. If someone is ready to go, how do they start the process?
Sure. You can connect directly with me, and I can begin the process, at least review what you're looking to do. If it's an existing business, we can review your financials. What we'll ask for is your last 3 years tax returns for the business to get an idea of your historical cash flow. If you're a startup, I know SCORE does a great job of helping you with your business plan, and 3 years of projections is what we ask for. So certainly can reach out to me directly. Once we get you into the process, we can connect you with a banker in the Tamarack area, if that's where you're located, or anywhere in those territories around Florida.
Okay, perfect. That's great. We have another question from Michelle. What type of retail is preferred?
On the retail side, I would say I don't think there's a specific retail that we're looking for. If it's clothing or, I don't really think we have a specific industry class on the retail side that we'll look at. I think if it's a startup, we might have a little hesitation. But if it's an expansion to another retail location, or it's an acquisition of an existing location, then we would certainly look at it.
Okay, understood. The next question we have is, would you consider real estate brokerage startups?
We would, from the business standpoint. We probably will not get into obviously, investment real estate is not what the SBA will allow. But we will look at the startup or look at the brokerage itself from a business standpoint for the financing need.
Okay. Seems like you have a lot of flexibility.
Yeah, don't get confused by that matrix. It's just a guide. When you're looking through that, we look at a lot of different requests, and we do have some flexibility, whether it's an industry class that's not listed there, or in the retail case that, we'll look to the borrowers then personally for the strength.
Understood. Very good. Next question is, do you finance lawnscape? I guess landscaping for lawns, I suppose.
Certainly, if it's for the equipment and all the other materials to run a landscaping business, yes. If it's more wholesale, for landscaping materials like plants and flowers, etc. Yes, we actually looked at a landscaping company in Palm Beach County just a few months ago. He owned a piece of land out west of town. I believe it might have been in Loxahatchee, but he wanted to move his existing location to this new land. So if it involves plant material, etc., yes, we will look at it.
Okay, very good. And a question from Kelly: what about a more tech company, a lead generation company?
Yeah, we've had some experience in the e-commerce space. If it's an existing e-commerce business, we would prefer that. If it's a startup, we might have some heartburn on that, just because we don't have a ton of experience in the tech space. But I can tell you that we've looked at several e-commerce companies. Again, one in particular that I worked with was acquiring another e-commerce business out of California, and was going to be based here in Florida. So we were able to look at that request and get it done.
Okay, very good. Next question. What if you only have a year and a half of financial experience?
So any request from a business that's under 2 years old, we kind of consider that a startup. So as I mentioned before, on startups, we would ask for their business plan and 3 years projections. And we would obviously look at the year and a half experience to see the historical cash flow there, but it would be heavily weighted on the projections moving forward.
Sure. Okay. Very good. Stu, I see the website you included, Jamaica Coffee Cup. I'm not sure what the question is, so I'll leave that for now. If you want to type in your question, we'll address that. Lysandra asks, I'm in Tampa Bay area. What about nail salons and affordable housing?
Yes, we will look at nail salons. And as far as affordable housing, we won't there. You can't provide SBA financing for, again, an investment property. If it's for development, uh, for that, we could possibly look at it on our conventional side of our lending program. But I don't believe we would do anything as far as the construction or build out of affordable housing.
Okay, good to know. Next one. Hello and thank you. I know a lot of the people, Jim, are appreciative of the information you're sharing. Please expand more on reasonable invested equity, along with using alternative financial resources. That was part of your presentation under Am I Eligible? So would you expand on that a little bit, Jim?
Sure. Equity, as I said, in some cases, we will, if it involves real estate, we can finance up to 100% of the purchase price. The minimum requirement we would ask for is 10%. And as far as reasonable, out of that 10%, 5% of it can be from a gift. 5% of it can be from the seller holding a note. So there's a couple different ways that we can look at equity injection, not just from the buyer or borrower, but how the seller or gifts from a family member or other business partner could assist with that equity requirement.
Okay, great.
Hope that answered the question.
Yeah, and I think you're including your contact information in the presentation that we send out, so I think folks can contact you directly after the fact as well.
Yes, absolutely. I tend to a lot of questions. I cover, my role is to cover all the branches in the state of Florida for Bank United, as well as we have one branch in Dallas and one in Georgia. So I get questions every day, not only from the bankers, but from clients that they send my way.
Perfect. Very good. We got a few more questions. Next one from Katie. When needing loan for expanding a dance studio, would it be under owner occupied or expansion?
If the request is to acquire the real estate, then that would be owner occupied. If you are in an existing location that you own or own the real estate, then it would be considered expansion. And then the other case is if you're renting the space you're in, it would be classified as expansion, but it would be an improvement to the leased facilities.
Okay, that seems that maybe have to be a direct conversation, because it seems like it touches on two different aspects. Okay, next one. Will Bank United consider a 7A loan for an existing restaurant in the New Jersey area? We're looking for working capital. Been in business for 7 years.
Probably not. I think we're kind of restricted to the areas where we have branch locations. As I mentioned, we do have 4 or 5 offices in New York, most of them in Manhattan and maybe one upstate, but probably would not be able to help you in New Jersey. But I could certainly, put you in touch with a lender that would cover that state.
That would be great. Thank you, Jim. Next question from Michelle. What if you want to purchase commercial real estate to acquire and also use part of the retail store for my other business? I'm a licensed realtor, also a need to own my own retail space.
Okay, as I mentioned earlier, if you're buying a piece of commercial real estate for your business, you must occupy at least greater than 51% of the space. So if the retail location is less than that or more than what your business is going to occupy, then we probably couldn't proceed. We could certainly look at it on our conventional side for the financing, but under SBA, you have to at least occupy 51%.
Okay, perfect. And one more question so far. Please give me a few examples of what I can base 3 years of projections on, specifically for a brewery with a tap room.
Okay, that's a good question. A lot of those are still popping up around the country, and it's a popular business. I would recommend if there's any local breweries that could provide you with some of that data. I know that's really what the bank is looking for. Is as I mentioned with franchises, we get a lot of that data from the franchisor on all the locations. So I know it can be a little tough to determine projections based on an industry that's not fairly new, but if you've had experience with a previous brewery or can access any data, that would probably be my recommendation to kind of put together what the projections can be. I can provide an outline of a 3-year projection worksheet, which will kind of give you the basics of P&L or profit and loss. But to get specific for a brewery, I would just say maybe if you had access to any other local breweries, or they could give you an idea of what expenses they really have. I know it's highly capital intensive business,
Yes.
But happy to help any way I can.
Okay, great. One other question: does utilizing a score mentor have an effect on loan approval? So
No, I certainly think it helps. From a banker's perspective, we're relationship bankers here at Bank United, so we really want to understand your business. But it always helps to have a seasoned professional, and I know SCORE has a ton of really seasoned professionals that they work with. And yes, there's a lot of weight put into that because we know the business plan is going to be done properly. We know the projections are going to be kind of in line with whatever industry that you're looking to start. So it does make a big difference.
thank you, Jim. And yeah, as SCORE, part of our role is to get the entrepreneur to think through everything they need to do in terms of establishing or growing the business. So we step you through a sort of a mini business plan. So you think about all aspects of the business. And so when you go to a lender or you try to partner with another company or another business, you have all those answers readily available. Couple of other comments from Kelly, who had asked about splitting the space earlier, so I could buy a home using the loan and have a home office. How does that work?
It's kind of tough on the SBA side because it's got to be at least zoned commercial or zoned mixed use. I know I've looked at one deal in particular that it was a home, but it wasn't a mixed use zoning. And we were able to do it SBA. I do know that we can look at that on the conventional side because we do see a lot of home-based businesses. So that may be a direction to go in.
Okay, perfect. Well, I think you have, Jim, either covered everything people need to know or you've answered all their questions very well. So I sincerely appreciate what you've covered, and as SCORE, we appreciate the partnership with Bank United and how great you've been to work with. So we're going to wrap up. If there are other questions, I ask that you contact Jim directly, or if it is a SCORE question, contact your SCORE mentor or request one. So let me wrap up. So I want to thank you for giving us your time. You're going to get a survey in email from us, and we want you to tell us how we did, what we can improve on. In addition, we'll send you the content that was covered here, and Jim's gracious enough to offer his contact information. And so we ask you to follow up on that with us. In terms of, sorry, I'm trying to move to it. One other thing I want to offer up is if you do want a mentor, you can scan this QR code here, and it will direct you to a form where you can quickly fill it out, and you will get a SCORE mentor in your local area or if needed, outside the area. We have a lot of flexibility. So again, I want to thank everybody for attending. I see a lot of positive comments in Q&A and in chat, and I'm appreciative of your time and a score, and I know Jim appreciates your time as well. So I hope everybody has a great afternoon. Take care.
Thank you, Raman.
Bye-bye. Thank you, Jim. Talk to you soon.